Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me to the start of the new week. Well, the Australian dollar has had a successful bullish week, which began last week with the retail sales, with the market increased by 1.2%, tripling the expectations. Also, building approvals came out well above projection and jumped to 11.7%. Apart from that, the Australian dollar has appreciated a weaker US dollar. However, the technical implications are still a little bit concerning. Therefore, I am actually quizzing whether the market can actually rally on from the break of 79.10 on Friday. At the moment, I don't have a view, but I'm sitting on the sidelines to see if we get any further confirmation to the US dollar when it broke down on Friday, when it took out the support at 91.00. If the case is that the Aussie is bullish and we do see further gains, then we could be looking up towards a target which is approximately around 80 cents. But nevertheless, we do have a stochastic that is showing some bearish divergence. So this also does quiz whether the market can rally on. As you can see, the surge in the euro took out the resistance clearly around the 120, 60, 80 level, and now breaking through on a dollar index at 91 figure after posting a low of 90.51. With the break of 91 figure, does expose the region of 86 on the index, which could in terms put the euro towards 124 to 126. Now, with that being said, there is divergence also with the RSI, and along with most markets, when we break significant levels, we do need to see confirmation. So I don't have any real strong big calls out there. I'd rather like to see how the market plays to the break from Friday. Now, the euro may be a little bit quiet today, purely for the fact is that the US is out for Martin Luther King Day. So we could see a consolidation for the next 12 hours until London comes in. Well, dollar yen still holding above the support at 110.85.95. And surprisingly, with the weaker US dollar, it's actually held up relatively well. If we continue to hold above this level, then we could see a rise up towards 112 figure 10. But the technical indicators are still a little bit concerning, and a break of 110.85 would expose the next target, which comes in at 109.65. Well, the pound, like the euro, surges and makes the RSI, and also, if you look closely, the rest of the indicators are overbought. Nevertheless, from the break of 135.95.05, does put further concerns that we could be seeing a rally onwards towards 138. Now, before I come out with that call, I still would like to see confirmation like the euro. What may have triggered the rally is that the fact is that in February, the market will be looking at the Bank of England to see if it raises rates. At the moment, it is possibly now pricing in the fact that we could see the Bank of England hike rates by 25 basis points. There would put the pound towards a 140 target, but we need to see further evidence before my call is actually confirmed. The gold surges, and I've been relatively bullish all the way along here with the pullback respecting 1,308. Now looks towards a target of 1,345. Do be a little bit cautious if you're long, as we are overbought. Therefore, we could see a pullback quite easily to 1,332 to 33, which was the break level. Beneath there is firmer at 1,326. And to wrap up with oil, the market nudges slightly higher, and at the moment is relatively still overbought, even though the market is still persisting towards the highest levels of around December 2014, is that we may be looking up towards $66 a barrel, but I clearly like to stress that we are overbought. So we could see a rejection from there very, very soon. So that wraps up for today. Thank you very much for joining me, and I hope you have a wonderful start to the new week.